Trump's new Fed chair, Kevin Warsh, told Congress that the inflation fight isn't over yet. And just less than a week later, the Iran war is back on. This is it bad for the economy? Like, follow, and share. Banker Bill is going to let us know what bankers think of Trump's policies behind the scenes.
We're going to win so much, you may even get tired of winning.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition. It takes a little time.
Banker Bill, I think we have to start with the big news. The Iran war seems to be back on. First, though, I said this last episode. We kind of steamrolled over it a little bit. I wanted to double check my assumption on this. I felt like the real economic consequences for what happened in, let's call it the first round of the Iran war, ended up not being quite as bad as expected. They certainly weren't sort of the worst case scenario. A lot of that is because people were able to, drag reserves out longer. China did a really good job of managing their inventory. But overall, am I right that it just wasn't quite as bad as some people like you and other, people warning us what was going to happen would say it was?
Well, I said the oh shit moment was $160 a barrel. That actually never came, but that was the level of thought where I had concern where it could go. It never got there because a couple of things. One, large releases by the Strategic Petroleum Reserve, which you may see is now below levels from the early 1980s. We could talk about that if you wish. Second is you touched on the Chinese managing. I think there's a couple of things we learned from it. One is China focused on domestic production, and there's a price, it seems, that the Chinese have in mind, where if the global oil price is below that price, I don't know where it is, maybe it's around 75, $80, they will buy on the open market. If the oil price starts to move, it seems maybe toward 90, the Chinese stop buying on the global market and rely more on internal production. I don't know enough to say how they're managing between the demand factors in their economy, but yeah, that's kind of how it's working right now.
Is this kind of a situation like the tariffs where it's going to be really sticky? It's just never going to quite get better. Sometimes it gets a little worse, but this is more or less where we are. You've been calling it range bound. Or if this war keeps going now in the indefinite future, it is a fighting war. There are ships going down in Strait of Hormuz every so often. We have the Houthis closing the strait on the other side of Saudi Arabia. Are those doomsday scenarios still in play, or is it more like the tariffs where you think that folks have gotten a handle on things, they've learned how to manage this new chaos?
My view continues to be into year end, oil prices will fall because the United States is a large producer of oil and petroleum products, and we have an election this November. That gives the president, the administration, every incentive to try to have cheaper oil prices. With respect to the tariffs, no, I actually think there's more concern there, I think, in both the finance community and in the general business operations community. Look, the tariffs are a financial issue that we can manage through. We had the latest tariffs just announced, last night, 2 nights ago? By 8 o'clock this morning, 8:05 this morning, I had in my inbox a full primer ready to go on exactly what Section 338 was, which I never heard of, how to deal with it with clients, etc. Energy's different. This is a physical constraint. The tariffs are a financial one, which, can be pushed back on or pulled back off with the stroke of one person's pen. It seems the conflict in Iran, we're all hoping that the ceasefire would hold, and it hasn't, and now we're back to this topsy-turvy volatility.
But it sounds like you're saying that this is more range-bound chaos. If you're expecting oil to keep going down through the end of the year.
Well, just look at it this way, right? Neither party here wants to be responsible or is interested in a full-scale escalation. I'm speculating, right? You're kind of asking me to speculate. But I think at the same time, there seems to be a maximum amount of pain each side is currently willing to withstand. And in the U.S., it seems maybe that price is based on gasoline at $3.70 a gallon on a national average. Above that, and we're approaching that level again, that's where we got in May. Above that, it seems that's where they backed off, and we had the memorandum of understanding. Right, we remember the trend. We were trending higher into mid-May. We were still moving higher. March, April, May, higher. Then we came off the boil after, or at such time that we said, "Hey, we're gonna both parties are going to cool off. We're not going to continue attacking each other in the strait. And I think now the biggest, it seems like, just practically, the biggest issue there is Iran wants ships to take one route, and the United States wants ships to take another route. And Iran is capable, it appears, of credibly attacking vessels that don't respect what it's saying is the route to take.
I don't understand how I'm supposed to square that.
We can. I mean, the business community is the same thing. I mean, I can tell you, generally speaking, it is exasperation and disappointment that the ceasefire didn't hold. I mean, that I can't speak. Obviously, I can't speak to you of direct client conversations, right? I wouldn't do that, right? Even in my anonymity. But the consensus has been, damn, this really sucks. We were really hoping this would hold. This is not a chip we want to worry about, and now here it is.
I guess I'm a little nervous that if Iran is a little bolder in Hormuz, that if the Houthis are successful in the other strait, whose name, of course, I've forgotten, and if more and more Russian production comes offline, that we won't be in a situation where we're rationing oil and gasoline. But maybe I'm just being a pessimist.
I don't see that coming to pass given how much the U.S. can produce today. The current level of the SPR, the Strategic Petroleum Reserve, it does seem concerning. There's really no more buffer there.
Oh, so we keep talking about how it's not fair that oil prices go up here when they go up across the world, because don't we have enough oil for ourselves, and that's just not how global markets work. But does it effectively put a floor on how bad it can get for the United States?
I think there is a ceiling on how bad it can get for the United States, meaning I don't think we'd ever have fuel shortages in the United States. You wouldn't be able to get your gasoline. It's not that there wouldn't be a physical shortage. It would just cost you more. And I think that's what we're seeing from the administration is there's an upper limit on how far they're willing to push it. And it seems Iran, too, has some kind of upper limit on how far they're willing to push. As that limit gets approached or breached, one side or the other scales back. And then we ramp back up. And, it sucks because you get you get questions from clients asking you to speculate on these types of matters. And, what do you want me to say?
But it does sound like you see the strait as being relatively open.
It doesn't seem that way to me. Not with gasoline creeping up to $3.70 a gallon in the U.S. That's the figure that's now come to the fore is specifically not oil prices, but gasoline in the United States. I'm seeing here in maybe around May 17th, we're up around $3.70 a gallon on average. And as of now, July 21st, I'm seeing $3.40.
So you're saying at the pump, it looks like the strait is closed.
Yes, again. And remember where we were on February 24th. Gasoline future was sub $2 a gallon. It was like $1.90 or not. It was like $1.97, and now we're sitting up at $3.40. I mean, these shocks are just getting so exasperating. The incessant man-made supply shocks. It's ridiculous. It's becoming very hard to deal with.
I've lost track of who's being the optimist and who's being the pessimist in this part of the conversation. But albeit to say, it's not going to get better anytime soon, but you're not worried about the worst case.
No, because I think we can both agree, it seems, again, there's some kind of upper limit here on how much.
I see what you're saying, but I don't
at least through, I'll give you something else. You want what we talk about in the finance community. Would not surprise after the election, there's boots on the ground. Just get us to November, boots on the ground in Iran.
Okay, that I don't like hearing that, but that does put you that's specific type of cynicism that you're applying.
That's coming up. That never came up. That was not at least not to me, and at least not openly. And now it's come up. Now it's a what if we just get to November, we have the election, and then it's boots on the ground.
One thing I was shocked to see, because I thought we were the ones who toppled Venezuela, not the other way around. There's subsidized gas in New Jersey. What's going on? What in the socialism is Trump doing?
Oh, are these the All America? Was that New Jersey? I thought that was in Pennsylvania.
Oh, excuse me. I'm sorry.
And it's one station, right?
I saw that. I thought that's the big question. Nobody knows. It's a dark money group They've got a PO box somewhere. People have tracked down the finance information. Everybody who's listed anywhere says they have no idea what they're talking about. I'll need to take another look to see if anybody's done any successful digging, but it seems to be a black box company. No, we have no idea. We'll never have any idea. They have no obligation to publicize their financials.
So there's someone offering it's not free gas, it's discounted at one gas
Right.
station in a Pennsylvania town with the suburbs of maybe Philadelphia, and we don't know who owns it or who's responsible for it, but boy, are they helping to take the heat off, I guess, a few people in the community there. But again, I stress it's not free. It is just discounted. It's kind of bizarre because it's not like it's especially cheap. It's still like $3.50 a gallon or something.
I can't believe it. This is another tick in the box of me calling Trump a communist. Here we are again.
Not gonna get any more for me.
Straight out of Chavez's playbook. Although, congratulations to everybody getting that cheap fuel. We hope we're using it for a good reason. Housing bill passed. Miracle of all miracles. We had a bipartisan piece of legislation that became law. And small technicality here, folks. I know that I needed a quick constitutional reminder here. You'll probably remember that Trump famously declined to sign this bill because he's being a stickler about the SAVE Act, his attempt to make us all re-register to vote with our birth certificate or our passport before election day. It's almost certainly not going to pass. But anyway, Trump wanted that so badly. He said he wasn't going to sign this housing bill, but that would be a pocket veto. Our founders saw that one coming, and they said there's a 10-day window. There's so many caveats that just didn't happen to apply here that would allow this bill to become a law if Trump refused to sign it for 10 days and Congress is in session, and they were in session. So it's now law. Banker Bill, I know you had some thoughts on it.
Yeah, I mean, look, I think this was bipartisan because it's toothless. And real housing reform would mean forcing federal hands into local zoning, potentially some of those communist, socialist kind of viewpoints. And they'd have to go into local zoning and state law. And even this White House doesn't seem to be willing to spend political capital fighting local city councils, nor is Congress. And so what's left is this symbolic bill that costs nothing, changes nothing, and just gives all the incumbents a talking point, rolling into midterms. The number one thing I hear about this is that it's bipartisan. And that's because there's no money attached to it. There's nothing else to say. Now, the no money thing I'd actually say is a good thing because typically the government's history on money and housing is to subsidize demand, put money behind demand, only exacerbating the problem. So at least, they're not doing that in this case. There's a lot of other small tweaks, but there wasn't any real change. What did you think?
Well, first of all, unfunded mandates are always bad. They're always just hot air. But
Yep.
The one big thing in it, of course, was the ban on institutional financial companies buying homes. They're now only allowed to buy 350. That's become pretty popular. It was a really big progressive AOC DSA thing until Trump embraced it recently, which is why some Republicans came over on it. I think you've actually been very good on this. Nationwide, absolutely not making a difference. But there are a couple of markets where you said the big holding companies are making a difference in terms of gobbling up too much real estate.
Yeah, I mean, it really is a couple markets. It's where large landlords can exhibit control over the entire real estate market. And one of those cities, it seems to be, is Atlanta. Another one of those cities or markets seems to be the Phoenix area. And in other markets, it's just not a problem. We have some 3,000 counties in the US, something like that. And there's something like 33 where, 30 million people live. And unless we are able to get better housing options and better transit options for outside of those areas, outside of those counties, then people are going to continue to climb over themselves to live in those population centers where things are happening, where the jobs are, and that's going to drive up the cost of housing in those locations. And this bill just doesn't change that. It's another compliance box check.
I've just come around to the idea that there is nothing that the government, especially the federal government, can do to tweak the housing market just right enough to bring just the right investors in.
Nope.
The number one thing that the federal government can do to lower the price of housing would be to go out and build a whole bunch of housing New Deal style. And I know that that's not anybody's first choice. We would all love the free market to be able to solve this problem for us, but sometimes the free market just isn't free. I think we need to go out there and build some homes.
Two questions on that. First is, where would you get the money for that?
I would appropriate it from Congress. I would try to find as much of the housing money that we have right now that we're using for these different grants and these different.
And then what you want to like? Just give me like 30 seconds on what you want to do. That you want to build them and then sell them, or you're going to have like a Army Corps of Engineers kind of thing.
Or we work with the trade schools and do this as a whole education thing. The options are unlimited, but I think we just have to understand that there is no market tweak that is going to get us to increase the housing supply when there's always more luxury apartments to build, more hyperscalers in Silicon Valley to invest in, and we need to just go increase the supply ourselves.
I mean, look, there's a lot to unpack there, maybe for another time. But something that I'll call back to was something like tort reform in a state like New York, and that's definitely within the state's purview to make adjustments there that would that could or would help the supply of housing in New York State and specifically New York City. Another thing I'd add for you is, as it relates to housing, is the market can't solve this problem because of the political constraint, right? There's all these zoning laws and things. If you were able to just build and there was more freedom to build, in the same way there still is, even though there's now consternation growing and backlash growing about these data centers, they're still pretty freely being built nationwide. Housing, I don't see that way. People run from the hills to try to block new housing. And if that wasn't the situation, I think the quote unquote the market would stand a much better chance at solving this problem. And the reason why you need government involvement in some way here is because it's in part a political or government created problem.
It makes a lot of sense when you say it. We've been hearing folks make it for years. And if you find me a developer who says that that tort reform will get them to build a major housing development that they wouldn't otherwise build, then I'll have to agree that that's the right way to do things. That's certainly the way that I would want to do things.
Yeah, it wouldn't be the only thing.
But when we talked to a New York City affordable housing developer, he said, we're either going to put the money there or not. The market's not going to do it because the type of money that you're talking about, when you're talking about what would be needed to put a dent in
the returns aren't good enough. Yeah.
The returns are always going to be better somewhere else. So if they're always going to be better somewhere else, and we need to make this investment to make the American worker base, consumer base, the general market stronger in this country, then I think we need to start talking about getting our hands dirty and doing some of this stuff ourselves, or at least putting it on the table instead of getting it, burying it in this ideological gobbledygook. But at the end of the day, the way that our system's set up, the federal government can't force local governments. State can't force state governments to do jack shit on housing zones. Nope. So if we want to solve this housing on the federal level, I think we're just going to have to go build something. Our old pal Kevin Warsh went down to Congress.
Yes. His first Humphrey Hawkins testimony.
Seemed like a whole bunch more of the same. I was happy to hear him sound tough on inflation. He certainly seems determined and like he's taking it seriously. Overall, though, it sounds like he just said what he said earlier. I think at one point they even asked him what the impact of AI on jobs is going to be, and he just said, "I've got a special committee for that."
The task force.
Task force.
Yeah,
thank you.
I went back and listened. I got to say, at a little faster than a 1x speed of pieces of the testimony there. I want to add couple things. So the Humphrey Hawkins testimony, I don't remember when it came in, when it was instituted, but this is the only regulatory requirement of the Fed chair. I think it's biannual, has to come by law, sit in front of Congress and answer questions. Right. So that's the significance. I actually thought he was a little bit more forthcoming than he has been in his other media appearances. He told us that the housing market is straight up, it's not good. He told us that business investment is rapid and in some cases accelerating. Infrastructure and anything related to AI is in particular. He said unemployment's low, little change versus the last 12 months. Claims that the Federal Reserve will be fit for purpose, measured, focused, dedicated to bring inflation back to target. Was pushed on how he would accomplish the goals. I was not as convinced on this. He said he wanted broad-based economic growth, limited areas of price level stress, and saying he's committed and needs to take steps using rates and or the balance sheet. So I actually thought on the pricing he was a little bit evasive, because when he says limited areas of pricing stress, he's referring to, hey, The Fed's role is to make sure that the price level doesn't continually increase at a high rate. So overall prices, right? So think of like prices in everything versus the price of one thing. So if cotton goes up 1,000%, he's saying, I'm not going to be so concerned about. I'm more concerned if the entire basket is up 2 plus, 3 plus percent.
Well, it's starting to sound a little bit like the trimmed averages talking point that came out his first hearing. You were happy that we hadn't heard about it since that hearing. I think we were all a little suspect of trying to change the definitive inflation now, especially in a way that would make tariffs look better. But he was called out on trimmed mean being his preferred inflation metric, and he got very testy with Representative Torres for making that bold accusation.
That's a good one because I missed it. You got to tell me. When I didn't hear that.
She referred to it as his preferred inflation measure,
Okay.
and he said, if I had a preferred measure, I wouldn't have called for a task force to go back to first principles.
Okay. A little testy, but fine for that. But okay.
I think he got the message that nobody's a big fan of trimmed means when it comes to inflation. The other big testy moment was again with Warren. Nope, not Epstein. We still wonder why he's in the Epstein files. But she did push him about this appearance by Fed Vice Chair Michelle Baumann at a Bank of America meeting, which was in violation of the pre-meeting blackout
potentially
period.
And regardless whether it is or isn't, was or wasn't, it's a bad look. These events are common and it's incestuous, and no, it's not particularly insightful. Like they invite decimillionaires to these events, and people like Mickey Bowman come and speak in vagaries. I mean, like, honestly, that's what it is. And because it looks a certain way, which I get, it does. It doesn't look good. I get it. The media picks up on it as, insidery or biased. And it's I don't really see it as selling access as much as it is like, we're having a fireside chat for our premier clients with Mickey Bowman is really, these things happen all the time.
Well, I think the mistake that we have made in the last 20 years in this country is giving these folks the benefit of the doubt and assuming what you're saying is true, because we do want to imagine that events like this would be perfectly congenial and reasonable, and everybody would be very responsible about sharing just as much information as it would be for them to share that's responsible.
Right.
But we know that nobody can be trusted with that, especially now in the insider trading economy that we have now with everything that's happening with politics and the stock market and the prediction markets.
And I would add, in addition to recent members of the Federal Reserve who appeared to maybe have traded, inside the window.
I've been referring to it as the come on era, where every single time somebody says, hey, maybe let's prevent a conflict of interest. Hey, maybe let's dial it back 2 steps just to be extra safe that we don't get close to the line. And everybody goes, come on. And it's like, I'm done with it. I'm over it. A bad look is a bad look, especially now, especially when you work in the Trump, or not for Trump, but you work, when Trump is head of the president with all these attacks that have been happening on the Fed. I'm over it. If you're not committed to looking as clean as possible, get out of here. We have no tolerance for this in this era. If we ever want to get back from the Trump corruption, we have got to start having some standards.
Yeah,
and if you're saying, yeah, I get all that, but this is a bad example, I'm sure
I don't even think that.
I'm just so sick of them all being bad examples.
I think she makes it difficult for Warsh by doing this. At the same time, I'm sure it was seen as so innocuous that anyone involved is shocked it's become an issue. And now I would suspect that because this specific event's gained some notoriety, you won't see any in the upcoming future. I do got a couple more things on the Warsh stuff because, again, I thought he was a little more forthcoming. He said on AI models, AI mythos and mythos-like models are a near-term concern. He was asked, is AI causing inflation? He said, demand is leading supply and will contribute to higher prices in the near term. He is telling you, he was asked, I don't remember, I think it might have been a Democrat who asked the question. It might have been Mark Warner.
Virginia?
Yeah, I think.
Big tech guy.
Yeah,
if he's talking tech in the Senate.
The exchange between him and Warsh, I thought was good. I thought the exchange actually between him and the Louisiana Senator Kennedy was good. He said Warsh hasn't given up on Warsh, and Warsh hasn't given up on him, and they haven't given up on each other. And, everybody kind of chuckled in the room. AI natives may prove to be incredibly productive, was another thing that came up in that exchange. And in particular, Kevin Warsh seeks to work directly with Warner on productivity in AI. Kennedy was asking about inflation related to AI, Iran, and tariffs. And Warsh basically said, yep, that's what's calling it. And asked, what are we going to do? About what are you going to do about inflation? And this is where I didn't really like what Warsh said here, but he said we're going to talk the talk, we're going to own it, we're going to look at the tools, the balance sheet, the interest rates, the options. He's not going to leave any a stone unturned. And then on the task forces, the initial reports will be in January. There'll be public debate. Internal Fed briefings are expected to begin in September. There's some good nuggets in there. There really were.
I'm glad he was a little friendlier.
Screw the friendliness. He told us demand is leading supply and will contribute to higher prices in the near term. The guy's telling you prices are going up. He's telling you the prices are going up. And when he's talking to a Democrat, then a Republican, Kennedy, asks him.
But isn't he saying the prices are going up because of AI?
No, not per se. I was getting to that. Then Kennedy asks him, inflation's being driven by AI, Iran, and tariffs. Warsh, yeah. And then asks, what are we going to do about it?
Okay, he gave us the bare minimum.
No, I think if you're a Democrat, you need to be taking that and running with it. Trump's Fed chair is telling you prices are going up.
The Democrats don't need Kevin Warsh.
Yeah, you're right.
To say
I also don't need to make any suggestions to how Democrats should
No, you do, and that's why we have this show.
He's saying AI is inflationary in the short term. He doesn't agree with me characterizing inflation as short term, because he would say inflation is an over time duration kind of thing, right? That's where he talks about the price level. But that's what I'm telling you. And I think there is something to be said in the exchange that included, a Senate Democrat and then a Senate Republican, and this newly appointed Fed chair by this president, or having textbook or fundamental pillars of this administration, this president's policies, be undermined or be blamed directly for inflation in a hearing.
Sorry. I'm sorry. So the point that you were trying to make is that we are no longer in the zone we are wondering whether. We are no longer in the zone where we're wondering whether Kevin Warsh is willing to lie or cook the books in Trump's favor to achieve Trump's political agenda. He looked Congress in the eye. He said inflation's bad, and that means he's not cutting anytime soon, even if that last part is implied.
I'd say yes. And there's no cuts coming soon. And the drivers for inflation are AI, Iran, and tariffs.
Okay, you're right. I'm being way too cynical. Given how critical I've been of him in the past, that is a nice little improvement. Hey, last thing I wanted to touch on, you brought this up as something that broke just as we were starting to hit record. Trump's announcing that he's going to get with all the big utility companies and try to get some pledges that there'll be some caps on how much AI is allowed to increase utility costs around the country.
Yeah, so this from the Wall Street Journal exclusive, that major utilities and data center developers will sign a pledge to President Trump to pay more for the electricity needed to run AI models. The alleged signatories account for 80% of all power delivered to U.S. residences and businesses, according to the White House. And the Wall Street Journal analysis is the pledges are likely to prove difficult to enforce because power prices are decided by state regulators and electricity buyers and sellers. Sounds like the housing issue.
My immediate reaction is we have so many Trump pledges that have never amounted to anything, both good and bad. And part of me wants to say, but it's a good thing that Trump is forcing the utility companies and to a lesser extent, the AI companies into the conversation, putting them under the spotlight, forcing them to acknowledge that they have some sort of responsibility in this. But I got to tell you, I think that the political moment to try to get ahead of this, to try to build a trust with the American people, to let them know wasn't going to be like every other big box store that came in and screwed their town over. I think that moment passed months ago. The American people hate these things. We're starting to see it come up more and more and more in our research, unprompted, across the political spectrum, might even be stronger among Republicans than it is with Democrats. I think the opportunity for Trump and the utility companies to say, don't worry, we're not going to screw you on this one like you got screwed on everything else. I think it's over. I think we're starting to hit anti-vax levels of this is not about the actual issue anymore. This is about people exercising control over a world that they feel is spiraling insanely out of control.
And I think the people have a point, and Trump's lip service is in response to this chart. And how many times have I showed you this?
Yeah, this is the cost of if
Average price
electricity
of
increasing.
electricity in the US.
Yeah.
That's it.
And I think in the way that it is like the housing issue, I will say, is that of course Trump is hurting supply because he fails to adapt to an all of the above approach, and he's been killing all sorts of solar projects and wind projects across the country. So that's another reason why I just don't think that this is really going to amount to anything unless Trump's willing to embrace renewable energy as a market appropriate solution to the total package that's going to solve the problem.
You talk about building, such a large infrastructure project, and you talk about the government getting involved in building houses, and I'm more in the sense of maybe government providing the utilities, the roads to get there, but you could 100% sell me on a 30 to 50 to 100-year long-lived asset like a power plant, and an opportunity for the U.S. banks to finance that long-lived asset, right? Where the government, everybody from Trump to whomever is a Democrat in the House, wherever, can claim victory on that. And I just showed you the average price of electricity, and they're nowhere near doing something like that. There's no opportunity for these guys to work together. You bring up the good points about them blocking solar power where it makes sense, wind power where it makes sense, blaming these things on woke agenda or politics, when actually in these cases the business sense is plain as day. It's in black and white, and they still block it, right? And I could overlay for you the housing chart. Probably looks the exact same in terms of that electricity chart that I showed you, going up and to the right very quickly.
Absolutely. And I think this is unfortunately that worst case scenario of the AI bubble that you've been talking about for a few months now. Basically saying, hey, look, AI bubble, maybe it's a bubble, maybe it's not. But if it's a bubble, it's not going to be as bad as a pure financial bubble like '08, like .com, where all of the wealth we lose is on paper and there are sort of no ashes.
Everything was tied to credit. Yeah.
Yeah. And you said, well, with the AI, it's not going to be that bad because we're going to have the AI centers, and hopefully that will keep building out, and hopefully the infrastructure will start to follow it before the money runs out of these companies.
Like any other CapEx cycle. Yep.
But unfortunately, I think the music is starting to stop way too early in that dance, which you were starting to worry about a little bit in our last episode. Yeah. I think the big number is that Morgan Stanley said 130 billion of data center projects were stalled or delayed in Q1 alone.
Right. And if those projects broke ground, that's a problem. If you don't have to look it up, I'm not asking you to, but say if all of those projects were planned, right, they were just on paper, but nobody's put a shovel in the ground. Hey, not the worst thing in the world. Sucks, but no money went out the door. Building a tenth of a data center or a half of a data center or half of a power plant, very, very bad. That is pure sunk cost. There's no getting out of that. Dead money. You're not going to finish the power plant, and you're not going to try to pay to dismantle it because you have no better use. So you're screwed. Every CapEx boom is earnings positive, and they're cyclical because we all invest in CapEx, right? So we all invest in new production, new factories, whatever. I get to amortize, expense the cost of that factory, of those chips, of that power plant over years and years and years. But the revenue gets to be recognized immediately. So profits are going up, and if profits appear to be going up, they are, and they are right now. The music stop point is the gap or the jump off from the CapEx cycle, right? The build out to actually monetizing those assets. Because if you don't, when the time runs out, you will have a counter cyclical recession, right? Because the CapEx boom came and went. It went up and came down.
The more you talk about it, the more I'm worried that we're getting off the boat at just the right time, and I think it's just irreversible. There is no issue where we more need a national dad to bring everybody to the table.
The power's got to come with it.
It has to. And that would also be the easiest way to get buy-in. If you started building these things and people started seeing these things going up with the understanding that they weren't paying for them yet. But just like Trump tried and failed on the vaccine thing, I think that he's going to be forced, and the Republicans are going to be forced pretty soon to go to the data center side, just because I think the opportunity to sell the American people on this was 3 months ago.
scope this out for me, and on the politics side, we have a couple ways of approaching this. On the one hand, we have the Democrat way of I'm not going to say Bernie Sanders national moratorium.
No, you should.
You want
that
me to,
wing of the party?
You want to say that
wing
extreme?
of the party?
I was going to go with the Kathy Hochul version of a
Well,
moratorium. Let's slow it down, do it sensible. Let's get everybody together. We don't want to be exclusionary. The power has to come with it, kind of a thing. Versus, it seems like maybe the administration and therefore the GOP's view, it's politically untenable that voters have to pay for it. Find anyone else to pay for it.
Well, but I think that's what I'm trying to say is this isn't about who's going to pay for it anymore. This is really, truly, people do not want these things.
To play devil's advocate a bit, to tell you where, some may like these things or where they're being supported, think of a place like Salem Township, where in Pennsylvania, where 89 acres of farmland in a rural town of 4,000 people was sold for $20 million to build a data center. And the tax revenue that comes into that township now off of that sale, off of that land sale. And all the people now that sold all that land and, now have the financial means to, probably do whatever they want.
Banker Bill, cities that nobody is even thinking about putting a data center in are tripping over themselves to pass data center bans.
Say that again?
Cities that nobody has ever thought about putting a data center in,
Mm-hmm.
They're tripping over themselves to put data center bans into law.
Well, that's a shame. It's kind of wasting time since nobody's coming to put a data center in their town. So why are they trying to ban them? Is that what you're saying? I mean, this town's not.
I'm saying that in a way that the mainstream media completely missed. In the last 1 to 2 years, the American people have become radicalized against data centers on a level that's starting to approach anti-vax
That
levels.
I get fully, because all the people every CEO that's working at these companies or a lab is telling you that you're going to that's going to take your job.
And it's going to destroy the world.
Right. And they're the ones creating
Terminator.
it. So yeah, now they're reaping what they sow.
And if we want to get serious about this, we're going to need a bit more than just a pledge at the White House. And I think these guys need to finally acknowledge just the level of a hole they're in when it comes to base level credibility.
Look, if this is going to be successful, and by this I mean AI and it being adopted and people, liking it or adopting it into their lives and it being successful, it has to translate to profits in businesses at the bottom line by way of productivity or improve matters of the public good. And it hasn't.
Well,
and if it doesn't do that, you can't tell people that it's just going to take your fucking job. Too often, the argument about AI is being framed as, well, if U.S. doesn't, then China. And I'm very circumspect of competing for something that may be not worth winning. We should be very weary of competing against China for something that may not be that worthwhile. And we need to just take a careful look at how this technology is improving our lives privately in our own pockets or publicly when we walk down the street. And if it's not worth the investment. And don't tell me that we need to invest in it because if not us, then China. Well, then China can have it.
Well, and I think there's a lot of people who want to buy some time until they start seeing those results. And that's why they don't want to make sure there's investment in the
They don't have any more time, these guys. They've run out of time. They have no goodwill because they told everybody they were going to lose their job. And now they're coming to the point where you have to put up or shut up. You have to. And this is where I'm at. They got like a year to figure this out, less now. But I will still stand behind that if you build some big data center and you have all of this power supply that's now there, right, you're going to use it. That's not going to go by the wayside. That's worthwhile having. What's in the data center, the GPUs, maybe not, but the cooling systems will certainly be worth something. The power plant you put behind it will certainly be worth something.
Thank you, Banker Bill. And thank you for listening to Is It Bad for the Economy? Please like, follow, share, subscribe. We're so thankful you're here. Quick summer episode for us. I think that might be the biggest economic news of them all. Not that much actually changed in the last 2 weeks, but we thank you for keeping up with things with us, and we'll see you in another 2 weeks.
Take care.
We're going to win so much, you may even get tired of winning.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition. It takes a little time